Okay, hi everyone. Today we're going to talk about this topic, which is things that you might not know about HDB loan. Okay, so today if you are an existing HDB owner with a HDB loan, you are a BTO owner with a HDB loan, or you are planning to buy a HDB or even going to collect key to your BTO soon, I think this is one video that you should actually take note. My name is Joe. Thank you for tuning to my channel, and I really hope that you will love my sharing and do like the video and smash the subscription button. Okay, so in today's real estate world, okay, interest rate is one of the most spoken topic among all. Okay, with the US federal rate increasing the interest rate aggressively, okay, in fact, local banks are following suit. That's why you notice that for those who are under bank loans, okay, their interest rate has been going up if they are on a floating package. Okay, so the first magical question is, many people, okay, are thinking, is HDB loan a fixed or floating rate package? Okay, the true fact is the formula how to calculate HDB loan is based on a CPF OA rate plus 0.1%, which is to say CPF current OA rate is at 2.5% plus a 0.1 is going to give you a 2.6%. Okay, so which is to say, if one day CPF board decide to increase their interest rate, for example from 2.5% to 2.9%, which is to say 2.9 plus 0.1, your interest rate will be 3%, and so on. Okay, so it means to say, okay, HDB loan is not a fixed rate either, which is to say it could be subject to the market movement as well. Okay, with the inflation kicking in, assuming if you are to look at the bank interest going up, I'm not so sure whether HDB or rather CPF, will they increase their interest rate or not? This is something we will know. Okay, so point number two is we need to look into the CPF. How do they actually determine their ordinary account rates? Of course, there is also MediSave, there is special account, etc. So today we are just talking about ordinary account rates. It's because HDB loan is tied down to the OA rates. So if you notice in the history of Singapore for the past 20 over years, okay, or rather for the past 10 over years, interest rate has been stable at 2.5% for the ordinary account. However, if you trace back to year 1990s, I think you should have noticed that the interest actually went up as high as 3 to 5% or even 6% plus in the 1980s. So let's talk about 3% is considered very high already. Okay, and how does CPF determines this ordinary account rate? Based on what I recall, they are using 80%. Okay, 80% of the average fixed deposit rate in Singapore, and 20% will be based on the saving rates of local average rate of local banks. Which is to say, assumingly if a federal is to keep on increasing the rate, bank might follow suit, and also okay. So in general, it's a whole package altogether. When the mortgage rate goes up, when everything goes up, okay, the fixed deposit rate got to potentially goes up as well for the bank to make it attractive enough for you to put your money inside. Assuming where everywhere else are giving so high return and the bank is giving so low, I mean, most people will not want to place their money in the fixed D. So that's why there is actually a direct link between all these things. Okay, so this is point number two. Okay, so point number three. Okay, if today you are a HDB owners, okay, with an existing HDB loan, okay, if you are HDB, so what happened is in the earlier days, you heard of people who refinance to a bank loan. Okay, so in today's context, okay, I think that when I do the research, of course, a lot of banks, even their 2 years fixed rate is going above 2 I can't remember is how many percent, but lately I noticed there's bank that offer like long-term fixed rate packages, like for example a 5 years package, and at a relatively, I feel is a reasonable rate. So if you are an existing owner, I think you can do a consideration to actually refinance. Okay, because when I did the sum over a period of 5 years, with the difference in the interest rate, potentially, okay, you can actually save up to 10 over 1,000 in terms of the interest paid. And secondly is basically when we pay our monthly installment, is break into two parts. The first part is the principal amount. Principal amount is the amount which will be reduced from your outstanding loan. Okay, the second part is basically the interest. Okay, so what I can say is interest is basically money burned to the bank. Okay, this is something that the bank is earning. So today, if you are to do a refinancing, I think you might save some money. Of course, you have to decide carefully. Of course, both HDB loan and bank loan have their perks, pros and cons. Okay, one of the common things I heard about bank loan is people are asking me, can I use CPF to pay? Okay, and the answer is yes, you can still use CPF to service your monthly installment. Okay, so the last point, okay, I'm not going to speak about is point number 4. If today you are on the verge of considering whether you want to use a HDB loan or bank loan, I think if given the interest rate just now the package that I'm mentioning, I think you should seriously consider to take up the bank loan so that you probably can save more interest and pay more principal over this 5 to 10 years period, or rather if the package is only a 5 years, at least the 5 years you'll be guaranteed that you're paying lesser interest. Okay, so one tips especially for BTO owners is the moment you collect your key, okay, actually you can actually write into the bank to do a refinancing. Okay, even you're under a HDB loan, but of course the disclaimer is you can refinance from a HDB loan to a bank loan, but not a bank loan to HDB loan. So it's only one-way ticket, not vice versa. Okay, so with that, I really hope once again you all like the sharing, and thank you for tuning to my channel, and please help me to smash the subscribe button. Bye bye.